Good evening. This is Ken Long from Tortoise Capital Management. I want to do an abbreviated daily market commentary and then take a quick look at some interesting charts. This is the market commentary for December 15th, the trading day December 15th. We're in bull quiet mode. On an annual basis, we're at upper normal at 66. On a 10-day, we are at 72. We've pulled back from overbought conditions. The stretch above the 200-day moving average and the slope of the 50-day moving average are still very positive and bullish, and we are now under 1% for the ATR percentage of the last 100 days, which puts us into quiet mode. You can see on the 10-day index we've pulled back from above overbought conditions. No signals in the overreaction system, but we do have channeling system signals in semiconductors. You can take that signal in SMH or in SOXX, the other semiconductor ETF. And we have signals in Latin America and emerging markets. We're going to take a look at those charts later. S&P volatility, you can see it has pulled well back underneath the boundary of normal. It's as low as it's been in the last 180 days in terms of volatility. ADX continues to climb and is about a little over 22. Pivot point remains above the critical support level of 123 in SPY. If we're looking for rewarding strength tomorrow, if the market's up and we want to look for the winners, Kraft, Coca-Cola, Procter & Gamble, Microsoft, and Verizon. The Microsoft chart is unbelievable. It's superb. I have a hard time trading it right now because it's a breakout and I don't see any resistance overhead, so it's harder for me psychologically to trade it. But that chart is very powerful. We will take a look at that. On the Max Pain candidates, we're going to see some excellent setups in McDonald's, Boeing, Hewlett-Packard, although Bank of America and J.P. Morgan in the financial sectors are still attractive. So if we see the logic chain for finance firing, in other words, finance doing better than the market, and J.P. Morgan and Bank of America doing better than the financial sector, then those are easy ones to get on board. Max Pain and gold miners, China, retail, and Brazil. We have 551W setups in Boeing and Walmart. Still working from yesterday. Flipping to page 2. I want to highlight Alcoa, a trading favorite of mine, was a percent loser today, and it is over sold, and Max Pain on 10-day and 3-day, so that's a natural one for me to be stalking. It's under the critical price level of 14, which is a psychological level. It breaks above 14, and it's doing better than the market. That's an easy one for me. J.P. Morgan in the financials was a percent loser today and is overbought on 3 and 10 days, so that's a Max Pain candidate for sure. To reward the winners from today, Coca-Cola, Caterpillar, and Microsoft are all in very favorable conditions, especially Microsoft. It's as strong a chart as I can remember seeing lately. In the ETF area, all the things that used to be overbought have pulled back. We had percent losers today in Asia, less Japan, emerging markets, and silver. Oil was about the only thing strong today on the upside, that and the consumer staples. We're going to see a very nice pullback in silver, which can be traded on a risk-measured basis, and we will see the charts on EPP and EEM when we look at them in detail. Looking at the pattern summary in the Dow, we still had a lot of dojis today, and then we had 2 channeling signals fire in Intel and McDonald's. Intel is a triple screen pattern and is a Max Pain range compression. There's a lot of reasons to be interested in Intel tomorrow. McDonald's was a Max Pain and a Max Pain range compression and a channeling system, and that's got a very nice revert to the mean type of a setup, as does Boeing, as does Alcoa. In the ETF sectors, not as many dojis, but some. We will look at channeling signal setups in gold, Latin America, emerging markets, and U.S. real estate, and natural gas, Latin America, emerging markets, and real estate also on the max pain range compression. So there's plenty of diverse candidates to work on tomorrow. Okay, I want to shift over and take a look at some charts now. We'll start with the market health check for today. Slope of the 30-day regression line is still up and favorable. Price is still above the 20-day moving average. We have a couple days of pullback on very low volatility. The 20-day moving average slope is up. The slope of the 50 is up. We've got a long way to go to the boundary of sideways and bear markets down here at 113.5. We see ADX is still above 20 and raising, and plus DI is above minus DI, so a favorable trend. We have been overbought for about 10 days, and now we just have pulled back into the level of the upper range of normal. That's not much of a pullback in SPY. We'll see that there was a greater pullback in the internationals, which is what sets up the channeling pattern. ILF fired, and you can see it has pulled. Its price is above the 200-day moving average. It has pulled back into over sold conditions, which is the mechanical entry. Mechanically, we would just buy the open tomorrow. But as you can see, if we just simply want a test of the recent swing high, we're on the right side of value there. And if we see momentum, you could wait. You could wait to see momentum and then pile on. This is semiconductors. What a beautiful chart. Nice orderly pullback here. It's a fraction away from actually firing, but it was close enough that I went ahead and executed the signal. After each previous measured pullback, you can see that there was an attractive entry available, and we don't mind seeing that at all. So is it getting a little long on the tooth? Perhaps. This pullback was greater than previous pullbacks, but we're early in this next leg up in the bull market. If we see a bull market, then this is still early in the leg up based on the ADX reading. And so semiconductors are still the most powerful part of the U.S. technology, which is one of the leading sectors in the world. This is gold's measured pullback. It fired on the channeling. As you can see, it reached to oversold conditions. The last time it got to oversold conditions was here. After this pullback, you can see that sets up the investable opportunity here. So gold is at an attractive level for tactical trading. Emerging markets also has pulled back. This is the trade frame here, and we're at a key support level. That can be bought on momentum intraday. It can also be bought mechanically tomorrow. Silver has held up fairly well after this sharp pullback, and $30 silver seems to be a psychological area. The last time we had a significant pullback, you can see what, in each case, what happened subsequently. Does history repeat itself? No, but it might rhyme, and that's why we're still interested in silver. There's a lot of psychological commitment to it, including the psychology inside my own head. So just be advised, I have a bias long on silver. We can see in Boeing bounced off the 50-day moving average and the 200-day moving average. This is the pullback. Now we've had 2 days of support, failure to fail further. We have a really nice tight doji day today, and so a breakout above 64 3/4 is an indication of a resumption of the upward move. And with the target at about 67, it's very easy to see a 2-to-1 favorable trade. You can see here it's pulled back into sold conditions. The last time it did that and then broke out, there was still a nice move available subsequently. Hewlett-Packard, love it. Almost technically a 5-day down day. It's overbought. The last time it did that, it had a nice move. That's very attractive. McDonald's, it doesn't get any better than this. Failure to fail further. is finding support around the 50. Nice swing high to set up for target. Declining volatility, overbought. Nice chart. That's the daily market summary and some tactical trading targets available. Good hunting.